going on, Juco?
All right, man. How y'all doing on this morning? It is Friday. Thank God it's Friday, right? So, let's hop in what we got going for the day. All right. So, what we got going on today? Not really sure on what we trade today. Let's take a look at MES. We had NFP this morning up on payroll. All right, so here's what we're looking for today on Friday. We had NFP this morning. We swept previous day high with NFP. We're pulling back into this fair value gap. But if you take a look at the 4 hour, it's now presenting itself as a sweep, right? Like a sweep of previous day high on MAQ. But when you look at MES is more so that sweep, right? Drop down to the hourly. See the sweep of previous day high now starting to pull back in. Do we continue to trade lower to previous week low on today? I think we're going to be bearish on today. How about that? Is that better? 186 8808. How you doing this morning, brother? Okay. So what I'm looking for is we just had a sweep of previous day high. Market is now reversing back. This is just looking at it on the 1 hour. So this is acting as a sweep with this pullback happening here. So we could be bearish on today, looking to be able to trade back to previous week high. Now that we had this liquidity sweep that was here, taking out buy side, we have sell side liquidity that's hanging out around here. Right here. That sell side. So we could get this sweep of previous day high and be bearish on today, looking for previous week high. That is the plan for today. So it looks something like this. I drop down to the 15-minute. Got the sweep of previous day high. Market gives us a little retracement move, and we continue on down for the day. So it looks something like this. This is what we're looking for. 917. We're reacting off this bullish order block that's here. That was the trade. So we need to have displacement below this level before we can continue lower to take any type of shorts. Looking at movement on MES, trying to understand it. Yeah. So with MES, you had NFP this morning. You had non-foreign payroll come out this morning, um, which is here. You always want to check to know what's happening, what news is coming out. So we had non-foreign payroll happen this morning at 8:30 a.m. So that was the bullish move of what you got this morning. So that was this reaction here with these two candles, right? So if we drop to a lower time frame, like the 15-minute, and you come back to around here, 8:15, 8:30, right here, these two candles, were because of news, NFP, non-foreign payroll. So these two candles helped sweep previous day high. Now we're just pulling back. And what you want to see is if this continues on being bullish, reacting off of this order block here, that means that this pullback of what we're having could possibly reverse. But what we're wanting to see is displacement below this level. If we get displacement below this level, you can start looking for potential shorts pulling us back to previous week high for today. So that means that we would have to break below midnight open. And our chances for that, because you know we go off of probabilities, we have a 58% short success rate when it comes to trading back down to midnight open. So we got about a 58% chance of this happening on today. All right. So that's what's happening with MES, MNQ. MNQ, you can see the move a whole lot better. The reaction off of the fair value gap. We're going off of this bullish order block that was here. Here, I can show you right here. And this was a trick, right? Like you could see the manipulated move of what happened this morning on at non-foreign payroll is you have this bullish order block here, and the market starts rallying up, but look, it pulls back and wick people. It grabbed all these orders that was here to take people out of their trade. People who went off of this order block here and set their stop losses here. You see price rallies up, come pull back, snatch them out of their orders, right? Stop them all out, and then it continued higher and started to reverse back down. So you could see that manipulated move of what happened there. This is the stuff you have to be careful for, and making sure that your stop loss is where it needs to be. That's one thing that we got to be working on and practicing. So if you do this and you look at where that last low was here on this candle, if you would have had your stop below this low here, you wouldn't have got wicked out of the trade. But a lot of people got wicked out of the trade, putting their stop literally behind this order block. That's why it snatched those orders, then continue higher. That's what's happening on MES. I mean on MNQ. So I'm still bearish on today. I'm looking for displacement below this level. Once the market opens, strong displacement below this level. If we get strong displacement below this level here, I'm looking to be able to short this, and I'm targeting previous day low. That will be my next target for today on these shorts on MNQ. We get a break below midnight open, and we'll be in good hands. So I saw that move jump dramatically live. I was wondering what it was. Which level are you talking about exactly? Why is that level an indicator for displacement? Reason for it is because this is where you got that swing, where you started the swing high, right? Where you started creating new higher highs, new higher lows. So here is what we call a order block, right? This is where a lot of orders are placed. That's here. And here, let's do this. I got a better way of showing you. Hold on, I got a better way of showing you. So if you look at the move of what happened, we got about 6 minutes until the market open, so I could go over this real quick, right? So if you look at this move here, all of what happened in trading and in this range here, right? If you go back and look at this, we're gonna go up to the 10. We'll do the 10-minute chart, right? You see us trading sideways during Asia and London, right? So during London at midnight open, New York midnight open, we started to trade higher, right? This is the once we hit New York midnight open, we started to trade higher. But within trading higher, what you saw was this liquidity formed here all the way back from Wednesday. This has been a liquidity pool here from Wednesday. So once we hit midnight open and we started to trade higher and we started moving sideways, right? We could not break back below this level to be able to come here where this buy side liquidity was that was here. And it's been here since Wednesday, right? So on our trade on yesterday, this was a target, remember, for our first initial TP, our first initial take profit on yesterday. This area that you see that's highlighted from this liquidity here, that was our first initial take profit. And then we closed out here at this last level of liquidity that's here. So today, this morning, you can see we got all this chop for the rest of last night, and we started to break back above the highs of where we were on yesterday, of where we want to get continuation to all the way up here yesterday, breaking previous day high. But this ended up being the high of where we closed our trade on yesterday. So with this being the high of the day yesterday, the market started to trade back to that level after midnight, New York midnight open. Once it started trading back to this level, a lot of orders were set here because, for one, we had news at 8:30. And once news happened at 8:30, we trade sideways. A lot of orders are happening here. And when a lot of buy orders come here, you got a bullish order block that set itself right here, which is here, to be direct. Once these orders are set here, you can see the manipulated move of what happened, right? how it traded higher, but this candle here traded lower to snatch more liquidity from these people who put all their stop losses right here. They did not put it below this level, and they put their stop losses right here, and then the trade went higher based off of news. Now we're pulling back, and the market has pulled itself back into previous day high. So what you want to see when something like that happens is, okay, is this the high that's here? Is this the manipulated move, right? We got accumulation. This could be the manipulation, and now we get distribution. Soon market opens, right? And that goes back into that power of three of what I was talking about on yesterday. So, but in order for us to be truly short, right, you need displacement below this level here where these bullish orders happen. You need strong displacement below this level. So what we want to see is strong displacement below this level here. Once we get strong displacement below this level, we want to see a fair value gap be created. We want to see price retrace back into this fair value gap. That's when we enter the trade, and boom, the trade goes down lower. That's what we're looking for on today. That level is a strong indicator for displacement because that's where like all your bullish orders are set. That's the reason for that. So that's where your swing move happens. So if we were to do a Fibonacci, right, we go from our swing low to our swing high, right? So our low in this instance will be this candle here. It's 9:30, the market just now open, but it'll be this candle here. To this high. So that initial swing low is why you want to see displacement below that swing low. Strong displacement. Right now the market is just flipped a little bit. So let's drop down to a lower time frame like the 5-minute. And we're going to work this strategy along with trading our concepts is our 5-minute order. So we're still reacting off of this fair value gap that's here. We're still in here. But this may be a day where shorts just immediately come in and you just got to be able to hop into the trade. On the cues. I don't know what we're trading. Let's see what we're trading this morning. Today is Friday. Man, I don't know how that happened, man. Yep, so if we want to be bearish on today, we need that to play out, right? You got to get strong displacement below this level for us to be bearish on today. But how I feel is on MNQ, I really feel like we have to exercise some level of patience here and not rush anything at all, period. and just allow the market to tell a story of where it wants to go today. We know we were bullish off of NFP, but was that the manipulated move to draw people in? And this here is drawing people into longs only for shorts to be distributed on today. So I don't know. We're seeing we were acting off a previous day high here. So we see that bullishness off of previous day high. But that's still not enough for me to be able to enter into longs yet. I don't want to prematurely rush. Market only been open for 3 minutes. What does it indicate if it goes past today's high? That we are bullish? That we are extremely bullish? But right now, we still have this bearish fair value gap. Like if I go to the 15 minute 5 minute chart, you'll be able to see. So here, this is what we're dealing with. We have fair value gap here, right? And you also have one that's here. So this is the bearish fair value gap. And what you see is the market reacting here is just strongly reacting here within this level and this level here. So what we want to see before we make any move, does this fair value gap get taken out, creating bullish momentum to the upside? Then we could look for longs. But right now we're just battling in between these two here. And as we're battling between these two here, well, this actually got taken out, to be honest. This did here. So we're reacting off of this fair value gap here. You see price tried to trade up into it, tapped it, and now it's starting to pull itself back. What we want to see is real strong displacement. Real strong displacement before we make any move. But it looked good reacting off of this fair value gap the way that it did. It didn't necessarily go into it, but you can see it's looking like a change in state of delivery. Okay, it's looking like a change in state of delivery. Sellers are coming in very strong here. So let's just see how it reacts around this level of previous day high. If we break that and start trading below, I'll be looking for shorts. So we just gotta be patient. This is gonna take some patience to see how this profile plays itself out, right? So while that is happening, look, I want to show you something. This is why I was talking about the importance of the ebook here. So understanding order blocks, bearish order blocks, bullish order blocks for discounted arrays, those play a major role into what we're seeing here on the charts. This is a bullish order block. That's why price was able to continue higher here. We want to see this get taken out. We want to see strong displacement. So what we're seeing right now is buyers hanging out around previous day high, pushing the market back up. So every time price comes and taps back into this area, you see buyers step in and they're just pushing price right back up, right? Sellers are trying to still react off of this high here. If this high get taken out, then you may see me be bullish. It'll change my initial bias at that point. So what's helping me is, as I look at higher time frame, and what I'm seeing on a higher time frame is back on Thursday on the hourly chart, back on Thursday yesterday at 9 a.m. See the sweep of previous day low, and yesterday you just get this consolidated move here, and then you get a breakout, and now price is starting to come back. If we trade below previous day high, then we could start back targeting previous day low on yesterday, a break below midnight open, targeting previous day low, because you got sellers that are very strong that are sitting right here, right? So with them sitting right there, if you were to do this straight across, this is why we're not breaking out of this and you're getting that rejection and turning these into relative equal highs so far, right? This can create a bearish order block, possibly on the hourly, and we start to trade low enough to take us into previous week low for the rest of the day, for the entirety of the day. That's something that's possible of what could happen, but we just have to be patient enough to see what is a fair value gap, bullish and bearish. Okay. So FVGs are 3 candle placements. So it's like this. Okay, put this up right here to show you. Okay, identifying inefficiencies for fair value gaps, right? That's actually chapter 1 that's in our ebook, right? So a bullish fair value gap is the structural void, which is defined by the space between the high of candle 1 and the low of candle 3. It's a 3 candle sequence that happens and takes place, right? This area is an inefficient discount zone that the algorithm will naturally seek to retest later to restock buy orders. A bearish fair value gap is the structural void, which is defined by space between the low of candle 1 and the high of candle 3, leaving an unfilled overhead premium. So this is a bullish fair value gap. All you would do is look at this in a reverse pattern, and that will be your bearish fair value gap. So if we were to take a look of how that looks on the charts, right? Here's a prime example of that. Prime example of that is look at these candles here. And these candles I'm talking about, I'll mark them out. Candle 1, candle 2, candle 3. 1, 2, 3 created fair value gap, right? So you have a gap that's here. 1, 2, 3. You have a gap that's here. 1, 2, 3. You have a gap that's here, right? 1, 2, 3. You have a gap that's here. Boom, boom. So price reacts off of these fair value gaps, right? You have to know which ones are efficient and which ones are inefficient based upon price movement. So yesterday, remember when we took this trade on yesterday on MNQ and we talked about how it traded all the way back into this fair value gap, this blue mark of what you see of what I have. Look, I'm gonna show you better so you'll be able to see it. So you see this blue box that I drew out, right? That was the market on Tuesday. This was Tuesday. When market opened on Tuesday, we skyrocketed to the upside on Tuesday, right? Leaving no retracements for people to enter into longs to whoever wanted to be a part of the trade. If you didn't get in the trade early, you missed out, right? So we were able to get into the trade early because we did what we call a 5-minute opening range strategy on this play. It created this big fair value gap here. So this price had to come back to fill this gap, right? It could have happened within that same day, but what it ended up doing was happening on yesterday. So this was Tuesday move. Boom, that's Tuesday. Wednesday we go like this, sideways. Thursday we come down and we fill this gap. Once we fill this gap, that's where I entered long and we made money right here and got out of our trade. Price now comes back. It starts consolidating. It breaks up and breaks that high for non-foreign payroll, creating the relative equal highs here. And what it could do, this looks like it's building a sell profile to where we come back and distribute even lower. But fair value gaps work based upon the story of what's being told within the trade. So once these moves happen, you can use them for entry points if you want to take longs, and you can use them for entry points on when you want to take shorts. So let's see what's happening here. What we have, we're consolidating still on MES. Price action is looking very lethargic. We're just sideways movement right now. That's why you want to see that strong displacement before you make it, hop into any trade. You want to see strong displacement. So a lot of people got faked out, with thinking that, hey, this is a potential long here for continuation, but then price comes back, stops them out of the trade, and just starts trading sideways. So what we want to see is strong displacement candle to either the upside or taking out this high, or we see it break this order block here, break below previous day high before we take any trade. So we just gonna sit on our hands until that happens. Gotta be patient on today. MES. Let's see how price is moving on MES. MES is trading below previous day high. So what you want to see with MES, right? You have liquidity here, sell side here. You got sell side here. You also got sell side all the way down to previous day low. So if we're creating a sell profile, we want to see strong displacement candle. If we see strong displacement candle, then we can enter into the trade based off of our fair value gap and take shorts to previous day low. That's how that works. But until then, we sitting on our hands. We're not doing anything. We just take reading the market at this point. Because we don't trade, we don't like to trade this. Stuff that's like this will get you to lose a lot of money because you're stuck into a sideways pattern here where price is just moving up, moving down. It doesn't have a true defined place of where it's going. So it's a fight between the bears and the bulls. But what's being told to us on a higher time frame is that, hey, this was a sweep and we could continue lower with a break below midnight open. That's what we're hoping for. Can we continue and sellers step in and take us out lower for today, reacting off of this sweep on the higher time frame? That's what we want to see. See? So are you welcome? You're welcome. So we just be patient. Market hasn't delivered us anything as of yet. Yes, let me go to MNQ. We might trade the Qs on today though. We might trade the Qs on today. So I'm just being a little bit patient. Just being a little bit patient. But if I could go back to what we were talking about though, as the market decides where it wants to go, understanding these premium arrays and discount arrays is going to help you out in your trading tremendously based upon what I trade, right? Like everybody else strategy is different, right? But how I trade, the manual of what I created and the system of what I have and what I've back tested that I know that works for me, and made me a profitable trader. I don't go outside of that, right? So what we're looking for on today is that bearish displacement fair value, for that fair value gap for us to be able to enter into our trade. That's what we want. So until we get that, then we just chill for the moment. People who are very anxious, these are the trades that you can tell when people are anxious in the trades that they would have taken. This is where a lot of rookies mess up. They would have tried to take longs here, and they would have been targeting 29.80, right? But look, they would have got wicked out of the trade because they would have had tight stops. So they would have got wicked out of the trade here, going in a drawdown. Price moves up, they back in a drawdown again. Price moves up, back in a drawdown, right? Back in a drawdown. They would have been very uneasy in this trade. But we want to see momentum, volume, right? We want to see volume come in to give us an idea as to where price is going to go, instead of us just hopping in because of a candle sequence that we see. If we don't see any volume behind it, then we're not going to touch it at all, period. There's no reason to. Just sit on the sideline. That's what we're waiting for. But so far, it's everything of what I've said. What could possibly happen, right? Like of what we were looking for. So when we go back to the 15-minute, when we was looking at this on the 15-minute, what did we say we wanted to see? We got our sweep, right? This was the sweep. And then we said we wanted to see a retrace. We wanted to see this move happen here. Boom. That was what we wanted. Something like this. We want to see this profile. That's what I want. That's what I want. But my target would be like here. So it'd be something like this. This is what I'm looking for. But the market makers could do something completely different, you know? They could do something completely different. So we may be getting some momentum here. Let's see if we could get displacement below this level here, strong, with volume. If not, then just chop. We have 4 minutes till 10 o'clock, so okay, so guys might be into a trade here. There we go. That's what we like to see. So we have a bearish order block here. This is our chance where we could possibly get filled. Let's see.
Order filled.
I'm into this trade. All right, we're into this trade. Our first initial TP of what we're looking for is here. Our full target will be previous day low. But we'll look to take some off if we get what we want here. So let's be patient. So my first initial TP area, first take profit. I'm looking at 29,563 as one of those levels, 29,563. So hopefully we could get something that's there at 29,563. If we start trading there at 29,563, look for me to take off about half of my position here. And then I'll hold the rest to see if we could take out previous day low. But what we want to see is some volume start to step in to start pushing us lower. That's what I want to see. We won't move our stop until we hit first initial TP. That's when we'll move to break even. But as of right now, we want to hold this position and maintain our stop with where it is. So but it is Friday. Take the money. Take it, man. Take it. Don't wait for me. Take it. Take it, and therefore you secured a win on today, man. Take it and be profitable. Take it. Don't wait on me. Take it. See, so here's that block where we get here. We want to see a break below this level here of this bullish order block. Price could potentially reverse here. That's why you want to go ahead and take your TP. Turn that into your TP. You should take some. You should have took some off the top. No reason to be greedy. I'm just looking for something different based on what I see. So if price decides it wants to reverse back up, I'm still looking for something else for me. Did you take profits? Let me know if you took profits. W's in the chat, man. W's in the chat. W's in the chat. My cell phone is absolutely dead. Be sure to take profits, brother. When you want to take profits, go ahead and take profits. That's money in the bank. No need to be greedy, you know. At least leave like one runner, you know, just one. But secure majority of the profits of what you made within the initial trade, and just leave yourself one runner to see if it could hit that final TP of what we are looking for. That's what I would do. But do you understand from this morning of what we were discussing and talking about when I was trying to tell you how we wanted to see volume, but we wanted to break below this this order block? Here's where I'm going to take some profits off the table here.
Order filled.
I took some profits off the table there. But did you understand what I was talking about when I was saying that this morning, when I was telling us about what it is of what we wanted to see? All right, so let's go ahead and move our stop to break even. Oh no, what are we doing? Technically, what I want to do is move it into profits here. That's what I want to do. That's what I'm going to end up doing. I still like for us to target previous day low. That's me for today. So we just got to be patient. Okay, cool. I'm glad you understand. That's what it's all about. It's for you to be able to understand. I would hope that you took majority of your profits here, right, at our first initial TP, and took some off of your position. You're welcome, brother. You're welcome. I'm glad you was able to make some money today and yesterday. The point is to keep showing up, you know, and keep learning and getting better each and every day. So what I'm looking for here, I want to see more volume and push with more displacement to the downside. That's what I'm looking for. It's 10:15, so we still have a lot of time. So we're just gonna be patient, but I think we're just gonna just trail our way on down here. It's gonna be a battle, but you see that reaction? That's why we took our first initial profits there. If we see displacement below here, oh, we're cooking.
You're listening to Cozy Jazzy.
You went out when mine said 2K. I didn't know you could split your contracts. Absolutely. Absolutely. That's why I was saying take some profits off the table. You don't necessarily have to close it all the way out completely. So with me, when I hit around that number, right, I secured 1K in the bank. Here, I'm gonna go back to break even. This may end up being a break even trade. But it's still a W for it, like a semi W, you know, for today. If we come back to break even. Drop down here to this 1 minute. We got a fair value gap happening here. This may take us out of the trade right here. Let's see if we can get sellers to step back in and take this out.
Stop filled.
Okay, so that's a break-even trade on today. You know, we still did one 1K on that. So break even on the Qs this morning. Break even. I'm not going to try to look for another entry at all. Let's see what's happening with MES. We'll just take that victory there. Move over to see what's happening with MES. So MES, we semi got a sweep here. It's looking like it's created some bullish momentum here to be able to come out and have a draw on this liquidity. Let me go to a higher time frame. Let me see something here. I don't like the sideways movement of what we're getting here, but this is us looking at this on the daily. So drop down to lower time frame. Oh, why do I keep doing that? so short, man. We do got some bullishness happening here, though. We're still in this bearish order block. What I mean is we're still in this bearish order block here on ES. So you're really truly not bullish until this gets taken out, in my opinion. But what we did is we secured profits and took like on the Qs. If you go and look at it on the Qs, and how we was able to play it so well. We're still in the bearish order block on the Qs, but that strong candle right here, look at that reaction off of this area where we should have just went on ahead and took full profits right there in that area. But like I said, I was looking to target down here to previous day low. So the market decided otherwise, and that's okay. You know, you had that happen. That's why you take some profits off the table. So we'll walk away today with a victory under our belt and be cool with that. Explain the thick green line again. Why did it drop and stop exactly on that thick green line and go back up? So this line, this level here is what we have marked out as a liquidity pool, right? So this level is very, very, very strong where liquidity lies, and you can see where buyers step in. See, you got a top and tail candle that's here. Let me mark it out for you. I don't know if you read books, right? Do you like to read? I'm gonna show you a book if you like to read. Tell me if you like to read or not. Let me know in the chat if you like to read. If you like to read, because I could go in a lot more detail. Yes, you like to read? Okay, cool. So there's something that I want to show you. I'm looking it up right now. Just give me 1 second. Bear with me. Well, here, I'll do this. Move the chart over. Open this pretty big so you can see it. Okay, you see where I have this circled out here? This specific candle here. This is a top and tail candle, right? So when you have these, like, look, when this big bullish engulfing candle here, right? And you see price go sideways and it looks like it wants to sell off. So sellers stepped in very heavy here, but buyers pushed this all the way back up, leaving this strong wick here, like a very strong wick that was here, leaving liquidity sitting right here, right? So when it left that sitting right here, we marked this out here and we used that for the rest of until that gets taken out completely and gets swept through completely, we use that as a pool, right? So what we were looking for was for this to be taken out, this level of liquidity to be taken out to take us to the next draw, which will be previous day low. That's down here that we have marked out down here, previous day low. So it did not take this out. Buyers did what? Step right back in like how it did here. Buyers pushed the market back up and you could see the reaction. We go sideways a little bit and then boom, it skyrockets back up. We trade back down, back into it, right? We traded right back into it, but we did not push past it. So since we didn't push past it, we used it as a take profit zone where we took profits off the table in hopes of continuation to pass it. But since we did not pass it, we move our stop loss to break even. So as the market reverses back, in the event that it want to go back down to take it out completely, we don't take ourselves out of the trade. We just be patient. If it takes us to break even, then hey, you know, we secured wins with the trade down here into this level of liquidity here. And you put money in your pocket for the day. But for that full initial move, for that 1415 RR move back to previous day low, we didn't get it. The market didn't give us that today because it did not take out this level of liquidity. So this is a liquidity pool here. And we use these as key levels to determine our take profit zones and where we're headed, you know, within the market. So the market just reversed by tapping back into this pool of liquidity. It just reversed from here, and we could have used it as a signal for longs, right? But we were bearish on our initial bias for today, looking for previous day low, but we did not get that. So we'll just be happy with what it is of what we got. But if you're a person that likes to read, man, you know, I encourage you to go and read this book. It's called Japanese Candlesticks. Spend time with reading that so you can understand it. Because these candles are candlesticks. So what we had in the Western world, here I could show you what we had in the Western world. In the Western world, we had this, right? This was a way of how they traded back in the day, right? Think about that, like trading with lines. That's hard as hell. I'm gonna just be honest with you. What percent of the time does it go down to liquidity versus previous day low, which happens more often? Hey, you know, it's there is no true percentage of that because the market makers, you know, they create the algorithm where they it could happen, man, twice in a week. It could happen once in a week if the market is super bullish. It's just something that you have to know where it is and know where price is traveling to be able to use it as an initial target point, because that's where your high of the day is, or your low of the day is, or your high of the week, or your low of the week, your high of the month, or your low of the month. You want to have those marked out as key levels always. But back in the Western world, you could see these lines here. This is how they traded back in the day. So imagine trying to trade these lines. Hard, right? That was in the Western world. And the Japanese came out with candlesticks. Man, I say just start there. You know, you don't want to overwhelm yourself with so many different books. Just start there, and when you start there, you'll be good. You'll be good. Just start there, and then it won't give you analysis paralysis because you're just studying so much information. Just start there, and you'll be good. All right, y'all. We could have took longs. But yeah. So that was it for today. That's what we have. Um yes, so my book gives you the vocabulary like how I showed you. I went everything of what I showed you early on in the session is what's in my ebook, right? Like discounted PD arrays, understanding bullish order blocks, bearish order blocks. Like all of that is in there, along with the concepts of what we do, fair value gaps. All of that is in there with charts to break that down to you so you can see it rather than just reading it. You have examples that's bestowed before you, and you can use those examples to be able to help you when you get ready to trade. So if you're trading without me, you have a blueprint that's in front of you that you can use as a model to be able to help you. And with the candlesticks, that's just teaching you all the different candlesticks and the importance of certain ones so you could be able to know the story of what's being told between the candle. When the candle open high, it closes low, like a bullish candle, bearish candle, just the breakdown of different ones. What's a doji? Um, that's what that gives you. And if you start there, you know you're in good hands because you have a model in the system first, right? That's proven and back tested. As you can see, when you showed up with me in my trading, you see what it is or what I'm looking for specifically, and I call it out of what I want, and it happens, right? So you'll have a system in the model, and then you'll also have education based upon the reading of the candles. So you'll be able to know what you're looking for, and you'll be good there. You'll be good there. You'll be solid. You'll be solid. So you'll be solid. You'll be good to go. You will be good to go. So that concludes our session on today. Thank you for joining me, man. I'll be back here on Monday, 9 a.m. on Monday. We'll be ready to be able to attack the markets and do our thing. Until then, man, thank God it's Friday. Have a good one.